Hello everyone and welcome back to the Technomentalist channel. Today I'll be discussing the PE ratio in what is our first real video. The PE ratio, or price to earnings ratio, is a financial metric that is used for valuation of a company. It measures the share price in comparison to their earnings per share, or EPS. You won't need to calculate the PE ratio for each stock, as it is often provided for you on sites such as Yahoo Finance here. However, it is important to understand what that number means and how it got there. The PE ratio is calculated by taking your current share price and dividing it by earnings per share. Now, there are two variations to the PE ratio that are calculated using two different types of EPS. Trailing PE is calculated by taking your current share price and dividing it by your EPS for the trailing 12 months, or TTM. This is useful as it is calculated using actual performance metrics. The downside of using trailing EPS is that a company's past does not always predict their future, especially with the current market conditions. This is where the forward PE ratio comes in to fill in the gaps of the trailing PE. This variation of the ratio is calculated using the current stock price and estimates of future earnings per share. These estimates can come from the company itself or other financial analysts. A con of using this metric is the inaccuracy of the future estimates. A company may also want to put their EPS estimates on the lower side of things, as it looks more favorable when they surpass the estimated EPS. Average PE ratios are around 15 to 20. Once you start to get towards 20 and above, that'll signify that a company is overvalued. And if you're below 10 or around 10, it shows signs that the company is undervalued. This chart shows the average PE ratios for companies within the S&P 500 index. As we can see today in 2020, the average is around 20, as expected. During 2008, the average for the companies in the index were very high, signifying that a lot of these companies were overvalued. The PE ratio is a useful valuation metric and it is very easy to understand, but it also has its downsides. It's important to understand that there are many different factors that can affect this ratio, such as debt and leverage, or a specific industry or sector. You should never make an investment decision based on one metric or ratio, as a wise investment can depend on many different factors and individual risk tolerance. The PE ratio is just one contributing factor in making these decisions. Thank you for watching the video. I hope you learned a bit about the PE ratio and how you can use it for your own investing purposes. If you liked the video, make sure to leave a thumbs up and subscribe, and we'll see you next time.